New research shows more New Zealand investors are buying cryptocurrencies, potentially signalling a shift away from the property asset obsession.
You know, the research says to us that even property owners are diversifying because they want better returns. Some people are definitely in it for reasons other than investment, like they want to give it to the banks. You know, they don't like the fees they're being paid.
Uptake of cryptocurrencies like Bitcoin and Ethereum has put New Zealand on the early adoption map, with 14% of adults here saying they've actively invested in it, while another 30% are considering it. When asked why, most said it was an easier market to get access to compared with real estate. Those are the findings from a survey of 1,000 adults by market research company Protocol Theory, funded by the trading platform Easy Crypto. Easy Crypto has more than 100,000 users, buying and selling about 150 cryptocurrencies, from the more widely accepted to the seemingly sheer speculative. The only other research on crypto uptake here is from the market regulator, which estimated 10% of investors were interested in crypto in 2022. Easy Crypto has seen some of its busiest trading periods since then, with interest likely fueled by the launch of Bitcoin ETFs in the United States. Easy Crypto's Chief Commercial Officer, Paul Quickenden, says ultimately it comes down to accessibility and equality, factors other investments like property cannot always provide. He believes crypto could be the new quarter-acre dream for many. Paul,
Right.
thanks so much for coming in. Good to see you.
Well, and thank you for having me. It's really good to be here.
Anytime. So 14%, according to this research, is how many Kiwis say that they have invested or do currently invest in crypto.
Yes.
That compares to about 10%, what the FMA told us in 2022.
Correct.
How does that compare with demand that you're seeing at Easy Crypto? Is that on par?
Yeah, look, again, we're one of the bigger players in the market, so we're probably representative of that. And, you know, we've been growing over what we call the crypto winter, but growth in the last 6 to 8 months has been really high for us. And so adoption has been following Bitcoin's price. And so, yeah, we would agree with those kind of numbers. So, you know, something like 700,000 New Zealanders are holding crypto at the moment, or have held crypto, which feels about right.
How much are they on average holding? I imagine that they're investing less in crypto and Bitcoin than they would be in, say, property.
Oh yeah, definitely, and that's one of the key findings from our research with Protocol Theory. So, you know, people are feeling excluded from certain asset classes. They like the low bar to entry in crypto. They can tip in, you know, as low as $50 to buy crypto, for instance. And so, you know, very different investing persona. But the end goal is the same. People want to have a better retirement or a better financial freedom or whatever it is they're aiming for. And so that's a reoccurring theme in our customer base. It's just they're getting to it with different means now.
So how much money are we talking on average in somebody's wallet?
Look, it differs by different market segments, and we've got 3 different groups that we segment inside of our organisation. And so we've got ultra high value customers, obviously spend a lot with us, probably use our OTC services and that sort of stuff, and they're doing a lot of volume. High value customers probably look like, you know, you and I, and then we've got our more retail based segment, and it is a very big spread. We've got people who spend millions, and we've got people who, like I said, you know, are tipping in sort of $50, $100 a month sort of stuff. So you can kind of work out, you know, that they're doing somewhere around $1,000 per annum, something like that at the lower end.
I'm interested in that ultra end. Yeah. How much are we talking in terms of millions? Is it like hundreds of millions or tens of millions or singles?
I've not seen a trade of hundreds of millions, but you know, some of them are doing more than 10 million.
And are these individuals or businesses too?
Both, yeah. So we've got you know, family offices and trusts now as customers who have been investing for a long time. We've got, you know, individuals who either got into crypto really early, so back in 2012, 2011, something like that, and you know, have accumulated a lot of crypto wealth, and they have staggering crypto wealth. Like, it's really, really interesting. And then probably a trend that we've noticed in the last 8 months is, you know, kind of the entry of small businesses or acquiring crypto to put it on their balance sheet, we believe, taking the Michael Saylor model and being, Bitcoin bills and that sort of stuff.
Following MicroStrategy,
Yeah,
interesting.
yeah. So, it's worked for him, so why not, sort of stuff. Yeah. So so again, like very different profiles and very different investing trends. And quite often you can look at the trends and see one group selling, one group buying, and one group not doing anything, and they're very different. It's quite an interesting thing.
You mentioned the exclusionary aspects of some investment asset classes, and I do want to talk to you about that in a bit more detail a little bit later on, but just still on this adoption curve. If we look at this research and then compare it to what we've seen from regulators, it looks about like 2 percentage points increasing in adoption each year. 14% still seems pretty early in the adoption curve. So where do you think we are on that adoption curve?
Look, we think we're probably about to get into the early majority part of it. The research says that there's a lot of people considering cryptocurrency, like another 10% this year and another kind of 20%, sometime in the future. So that would say to us that we're still on the left side of the adoption curve, probably just got past the really early innovators and early adopters and now getting into that kind of majority part of the market. And again, the reason is that the feedback was really clear. They want financial freedom. They feel excluded from property in particular. There's another key trend that came through, like they don't like the fact that, lots of profit are going off to the banks. They really, the appeal of no middlemen, in our sector is quite evident in the research as well. And so, they're just looking for diversification and a way to kind of make their lives better. And crypto's seen as that trend.
Yeah, I did want to ask you about the factors that are specifically fueling this. And I wonder how much of it is pushed towards crypto because of the launch of Bitcoin ETFs in the United States, or how much of it is pull away from assets like property? Because it does seem like more people and more investors are coming to the realization that property is kind of just a mechanism for banks and councils to stay rich through rates.
Right. Very interesting perspective. So look, you can't argue with the returns. So Bitcoin was up about 150% last year alone. It's up 60% this year, and obviously that's an attractive proposition. People are chasing the money. Ethereum is the same, right? It's doing well. Then in terms of property, like the entry price to that now is really high. The debt to income ratios and all that stuff, 7 times your earnings, that's pretty scary for a lot of people, particularly if you live in a big city like Auckland with $1 million average price. Like that's a big number. $200,000 deposit is something that a lot of people are going to struggle with. And so, that is appealing for one part of the segment and obviously the younger part of our market. But we've got a very big segment of people in the over 60 category. And so these are people who, you would think are as boomers, right? And so largely property owners, but they're still worried about their retirement and they're diversifying their investment portfolio and investing in cryptocurrency in really big numbers. We can see a generation where they get married, have kids and get a mortgage and they fall off on the investment continuum. And then, sort of a late 45, 50, they start to come back in and start investing. And so, we've got a kind of classic investment curve. But the research says to us that even property owners are diversifying because they want better returns. And crypto is able, as an asset, able to deliver that.
So that suggests that this isn't a fixed pie, because I was going to ask you if you thought that it might be a fixed pie where there's kind of this amount of speculation funds that will just switch between different assets, right? But do you think that that pie could actually grow, that people could shift money out of property and into something like crypto?
Well, we are. We're seeing that happen. So we've got some customers who were in physical gold and are now investing in Bitcoin. And gold's done really well in the last 2 years in terms of price appreciation, but they're still seeing higher returns elsewhere. And so what they're doing is they're taking, our read is they're taking out the gains from one asset and putting it into something that might deliver more. Are they putting everything into it? No, that would be high risk, and we're not. And we're a business that want people to invest responsibly. So we believe they're putting a portion of their wealth, and that's a personal decision. The research sort of says 5% is pretty good. Quarter, which is a KiwiSaver provider, will let you do up to 10% in Bitcoin. Some people are more than that. It just depends on their situation and their risk profile. Not seeing that everyone go all in, but we are seeing people diversify, and that's a really big prominent trend at the moment.
We're not seeing institutions domestically adopt it though, at least not the ones I've spoken to. I recently interviewed the CEO of First Cape, Malcolm Jackson, and he told me that while some clients were asking them about Bitcoin and wanting them to invest in it, he was refusing to buy it.
Right. Yeah. I mean, New Zealand's inherently a little bit more conservative. The Bitcoin ETFs, when they launched in the US early January, like they've just done a round of filings, and all of the big institutional holders have now been outed. And there's whole states like Wyoming as a big investor in those ETFs. So it's starting to happen, but I would say that adoption is even further behind the retail adoption. And again, there's mandates and there's all sorts of things that need to be changed inside of these institutions to be able to hold this. It's speculative as well, right? And so, if you're going to turn around to your shareholders and say, hey, we invested in this, you've got to have a good solid case. And so there's people just kind of working through that, I would imagine. Do we see more and more people doing it? Yes. There's the biggest bank in Singapore got outed this week for holding millions and millions of dollars, several $100 million actually of Ether. Like they've just been quietly accumulating the second biggest asset in crypto because they can see an ETF coming. They saw what happened with Bitcoin. That looks like a good bet for them. And so but the numbers are a fraction of their assets under management, right? And again, they're just starting to put a portion of their wealth into our sector. So more demand is coming. So we think the pie will grow as more and more people kind of cotton onto it as just another asset class.
You mentioned equality, and I'm interested in your thoughts on how much of this small, albeit increased interest in crypto adoption in New Zealand is driven by financial returns. We know that the price of Bitcoin alone is up 60% year to date. And how much of it is morality? Because the Bitcoiners, the long-term hodlers, they will say that it's actually about the morality of the network.
Well, yeah, I mean, some of them are really into it for the tech. Crypto is very tribal, and people get, really personally invested in their coins, their projects, with their investments. And so some people are definitely in it for reasons other than investment. Like they want to give it to the banks. They don't like the fees they're being paid. They want to disrupt the world a little bit. They don't like some of the more authoritarian regimes that have been in application, or they're seeing an opportunity to make their life better in their own way. And so we're really proud about the fact that the diversity of our investors is really high. Like the female investors are probably close to 40%. Which Janine obviously as a founder is very, very proud of, and it's something we've been fostering for a long time because we don't believe this should be an asset exclusively for one particular stereotype of person. And so having all investors have access to it is a big part of what we're trying to do.
Do you foresee this early increased interest, and perhaps more to come, as you say, triggering any regulatory response?
Oh, sure. Yeah, absolutely. And it's starting, right? And so there are specific crypto rules just came into effect 1 June already around transactions and how we monitor that sort of stuff. We're seeing moves out of the Australian regulatory environment, and New Zealand's typically keep a good close eye on what's going on over there, and they're going after custodian businesses and people who issue stable coins and putting more rigor around their compliance and how they're managed and all that sort of stuff. And so we think New Zealand will follow suit, and it should be. Easy Crypto was a business that saw this asset class as something that would become mainstream. We've always acted like it's been a regulated financial product, even though it's still not. And we've tried to do what we can to be as regulated as we can along the way. And we just think that's a great trend. It gives the investors more trust and security in the space, and that's something that holds some people back. That's got a bad reputation in some quarters, but we think that can only be a good thing.
If we look at the adoption curve again,
Yeah.
Early adopters are typically the individual investors who do their own research, and then after that typically comes institutions. They're a little bit slower, and then regulators are typically last on that interest curve, aren't they?
Yeah.
Are they coming to you asking more questions and wanting to better understand
Absolutely.
this asset? What are they asking?
Oh,
and who?
look, so the Reserve Bank has a mandate to look at financial stability, and they're interested in some of the currency flows, and so that we've got some questions coming from them. Inland Revenue is obviously a business, an organisation that's interested in tax, and so they speak to us on a regular basis as well. They're interested in what's going on and where the money's going and all that sort of stuff. You know, we as an organisation spend a lot of time with the regulatory community, so DIA, FMA, RBNZ, and just trying to educate them what's going on, just so they're up to speed. Because the worst thing, from our point of view, the worst thing would be a knee-jerk reaction to something that happened, versus, you know, a smart, considered response to what's changing. And you know, we have some incidents in our market, and we just want people to know how they work, and you know, what they can regulate for and what they can't regulate for. And there are some things that we just can't control. Most of this is software operating in the cloud, written by some anonymous developer that no one really, you know, that you can't, you know, it's the internet money. It flows around, and so, you know, operates in a very different way from banking, which is, you know, 20, hours in the week, and then it shuts for the weekend, and you know, people tally up and all that sort of stuff. Our market works 24/7, always has. So just a slightly different beast, and so we just spend time with those guys, just educating them so that they can make wise, informed decisions. Yeah.
There's currently tax advantages when it comes to property. If you don't fall under the bright line text, then you're not subject to paying income tax. But if you sell your crypto, you are subject to paying income tax. So how do you see tax settings playing out here? And do you really think that if there's still the tax advantageous asset in property, that crypto could never really unseat that?
Well, that's a really good question. So tax is, at a national level, tax is certainly something that governments can play with to create a competitive advantage. And in our sector, we've seen nations like Portugal play with their tax settings and made, you know, attracted a lot of crypto people in. They had, you know, very low rates, and people kind of moved into and brought a lot of wealth. Like, crypto's got a lot of wealth into that country, and so, you know, certainly we've seen that happen, and Portugal's not alone in doing that. In terms of how it's treated, like, it's treated as property, like, so it does have capital gains on it. So if you buy it at 1,000, you sell it for 2,000, you got a $1,000 gain, right? And you have to pay your tax rate on that. That's not as you say, not, you know, New Zealand is a nation that's wedded to a housing market, and so it's not as tax efficient as property. But equally, you know, in the last 2 years, property hasn't done so well, right? It's come back 20-25%, whereas, like I said, Bitcoin's up 180% in 2 years or something crazy like that, right? And it works on a cycle, a repeatable cycle. So it's kind of like, as an investment class, there's quite a high degree of certainty if you hang on to the asset for long enough. And you know, if you can kind of get your head around the fact that you have this tax obligation and you should treat it like that, then, you know, you can still get good returns. And so that's how we view it. Will the tax settings change? That is a really good question.
Should they?
Should they? Like, my personal opinion, you know, if we want a certain type of immigrant to come into the country who is technically savvy, has wealth, and then possibly there's something they could do with some of their tax settings around that, and attract, you know, different type of investor class. You know, we've done that previously with, you know, the $10 million threshold when you had to invest in companies, I think. And so I think, you know, as New Zealand has precedents for doing something like that, I just don't think that the tax authorities are recognising quite the opportunity in doing that, right? And so, like I said, there are a lot of people, you know, there's something like 400 million crypto holders around the world, right? And the big millions of those people have a lot of wealth. And so, you know, could they do something for our economy? Probably, I guess, is the answer. So tax settings is something that needs to be thought through sometime in the future, I would think. Yeah.
We'll both keep an eye out. It'll be an interesting one to watch. Thank you so much for your time, Paul. I appreciate it.
You're welcome. Thanks for having me.
Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below, and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.